Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 29th, 2025, and we're diving into Kilroy Realty's Q2 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Kilroy Realty has reported a strong quarter, and I'm excited to break down the details with you.
Revenue and profitability overview. Let's start with the top line. Kilroy Realty reported revenues of $289.9 million for Q2 2025, up from $280.7 million in the same quarter last year. John, what does this tell us about the company's performance?
It's a positive sign. The increase in revenue indicates strong leasing activity and effective property management. Net income also saw a significant rise to $68.4 million or 57 per diluted share, compared to $49.2 million or 41 per share last year. This reflects improved profitability and operational efficiency.
And what about their funds from operations, or FFO?
FFO, which is a key metric for real estate investment trusts, came in at $135.9 million or 1.30 cents per diluted share, up from $132.6 million or 1 cent per share last year. This growth is a testament to Kilroy's strong operational performance and strategic asset management.
Leasing and occupancy insights. John, Kilroy Realty has been active on the leasing front. Can you give us an overview of their leasing and occupancy performance?
Absolutely. Kilroy signed approximately 423,000 square feet of leases during the quarter. This includes 225,000 square feet of new leasing on previously vacant space, which is a strong indicator of demand for their properties. Their stabilized portfolio was 80.8% occupied and 83.5% leased, showing a healthy leasing pipeline.
What about the types of leases they signed?
They executed a mix of new and renewal leases, with significant activity in development and first-generation leasing. Notably, they signed a 25,000 square foot lease at the 4690 Executive Drive redevelopment project, highlighting their ability to attract tenants to newly developed spaces.
Capital recycling and strategic initiatives. Moving on to capital recycling, Kilroy Realty has been active in this area. What are the key highlights?
In June, they completed the sale of a property in West Los Angeles for $40 million. Additionally, they have a 4-building campus in Silicon Valley, classified as held for sale, expected to close for $365 million. These moves are part of their strategy to optimize their portfolio and focus on high-growth areas.
And they also have a land sale agreement, correct?
Yes, they entered into an agreement to sell a portion of land at Santa Fe Summit for $38 million. This transaction is expected to close in 2026, pending entitlements. It's a strategic move to monetize non-core assets and reinvest in more lucrative opportunities.
Lastly, let's touch on their dividend.
They declared a regular quarterly cash dividend of 54 cents per share, maintaining an annual rate of 2.6 cents per share. This reflects their commitment to returning value to shareholders while maintaining financial flexibility.
EPS forecast and analyst expectations. John, let's discuss the earnings per share. Analysts were forecasting an EPS of $1.01 based on a survey of 4 analysts. How did Kilroy perform in this regard?
Kilroy Realty reported an adjusted EPS of $1.13, which is a solid beat against the forecast of 1.01 cents. This outperformance is a result of their strong leasing activity and effective cost management, which have positively impacted their bottom line.
What does this mean for investor sentiment?
Beating EPS expectations is always a positive signal for investors. It suggests that the company is executing well on its strategic initiatives and managing its operations efficiently, which can boost investor confidence and potentially lead to a positive market reaction.
Key takeaways. As we wrap up, Kilroy Realty has delivered a strong performance in Q2 2025 with impressive revenue growth, a beat on EPS expectations, and strategic capital recycling initiatives. John, any final thoughts on their investment prospects?
Kilroy Realty is well positioned with a strong leasing pipeline and strategic asset management. Their ability to beat EPS expectations and maintain a healthy dividend makes them an attractive option for investors looking for stability and growth in the real estate sector.
And thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Kilroy Realty's performance in the comments below.